Wow, guys, what a phenomenal week of trading it's been thus far. Between Jason and myself, we have brought in 500 plus pips over the last 4 days. And well, as I was thinking about it, I was really trying to figure out why. Was it the news out of Greece earlier this week? No. Was it the FOMC minutes, the 8,000 word FOMC meeting minutes that came out yesterday? Probably not. And really, as I dug down deep, there was only one reason why we saw the type of positive movement that we did. It's got to be the beard. Hey guys, Akil Stokes here, head currency trader with TradingPower.com, and welcome to my weekend review video. As you can tell, I'm in a very good mood because, well, I've made a lot of money this week. Now, if you're new, don't worry, I'm not going to spend this entire video telling you how great I am and how you should trade my super secret system that is going to guarantee you 500 pips every week for the rest of your life. No. This is an educational video. If you've been with me for any amount of time, you know that, well, trading is a grind. I take you through the good, I take you through the bad, I take you through the ugly week in and week out. And, well, this week just happens to be one of the better weeks. So what I have in store for you today is I'm going to take a flashback at a few of the trades. There were a lot of trades fired off. Jason and I took about 15, probably 10 of them coming from myself. I'm not going to take you through all of them because that would be a waste of time, but I want to take you through a few trades and a few examples that are going to be beneficial for your education on price action analysis, technical analysis, and structured trading. At the very end, I also want to talk a little bit more about the equity curve. We touched on it in last week's video, and I just want to show you guys really the reality of trading when you do have those big months, why they're important, and really how you get there. And I think it's going to be different from a lot of what you've heard over on the internet. I'll give you a clue. You don't just let a trade ride for 500 pips and hit home runs all the time. It's a much harder battle, but we'll get into that a little bit later. So first, what I want to show you is a flashback from a video I put out to my syndicate members on Tuesday, I believe it was, looking at a trade from the dollar yen. This trade was also on TradingView. It set TradingView on fire, got a lot of comments. So if you follow me on there, thank you for showing me love. And hopefully this video will give you a better explanation of the chart that I shared with you. Dollar yen's another interesting structure-based trade. You know, we had the breakout. We had our wedge pattern here last week. Jason made some pretty good money off this one, but we had our wedge pattern right here, right? Price action broke out of it. Now we broke out, came back down, put in a retracement to retest the level, broke out again, putting in a nice harmonic move, and now we're right back down at that previous retracement. And two things stand out as I go down to the hourly chart. The first thing, obviously, is going to be structure. We're looking at, boom, our previous outside return. If I just take a line and draw it from here, look at that. Look left, structure leaves clues to here, to here. We're holding a pretty good line here. It should actually be a little bit lower, right about there. We're holding a pretty good line, our last structural area. And then lastly, we have this, really this descending wedge pattern where we're coming down like this. And then we have this descending wedge pattern. And typically, this is going to be different than a flag pattern. Flag pattern and pennants, we're looking with this particular pattern, this descending wedge, we're actually, you can see we're putting in lower lows here. Typically, this type of formation breaks out the opposite direction. So as we're continuing to put in lower lows, we're likely to see a breakout to the upside. So again, we're looking at a risk reward opportunity here. If you're able to get involved at a good level, you're looking at stops. Let's say you enter at market. I might enter market. Let's take a look at this. We're looking at a stop. We're looking at an entry right here at market. We're looking at a stop loss right below the structure level that I drew out before, right below 118.26. And I probably will get long this as soon as the video is over. We're looking at a move, well, at minimum to retest the highs of this wedge pattern, or look left, structure leaves clues if you're into that head and shoulder type of thing. This is actually a pretty, probably not a bad level to take take targets at, actually. And then a secondary target. All right, so if you're new to TradingView, guys, you can go over to the website, tradingview.com. If you want to search me, it's Akil_Stokes. You can see I try to share at least one idea a week. Don't follow them and trade everything I trade, but just to give you an idea of the type of trader I am. And I've been getting some pretty good comments on just how educational it is. So it's a place you can go. Now, here's a look at the dollar yen trade we just talked about. And if I go ahead and click this button right here, you'll see exactly what we did. Boom. Really without any pain, we ran straight up into our structure level, also putting in a head and shoulders pattern. And here's the thing, guys, I don't trade head and shoulders. It's just not my trading arsenal. For me, it's no different than a structure-based trade, but you do want to be aware of these levels, and you can see the market respected that level. And although I didn't stop and reverse my position on this level, I did pick it out as a point where I want to take potential profits at. I don't want to fight it. I don't want to shoot for just a home run and well, strike out trying. I want to bank 40 or 50 pips, however much we made on the trade, and then look for my other opportunity. And that's part of the process of putting the puzzle pieces together. Trading, there's so many ways to trade. If you're going to be a price action and structure-based trader, though, I wouldn't choose one single way. I mean, I wouldn't isolate ABCD patterns. I wouldn't isolate just double bottoms. I would look at each skill that you learn as being a potential puzzle piece. And then as you go to break down the charts, what you're doing is you're putting those puzzle pieces together. Boom, I've got a falling wedge pattern, which means this. I've got structure, which means that. I've got a double bottom at that level, that means this. And you put them all together and you wait really for the planets to align. And when they do, you can get pretty accurate trading opportunities. I actually had a quote from one of my 12-week transformation members today. He's been in the course for 4 weeks, and he said, Akil, I'm 4 weeks into the course. I noticed that my trading has slowed down a lot. I'm not taking as many opportunities. And because of it, my results have been a lot better. And I said, Dan, that's perfect. I guess I wasn't supposed to say your name, but Daniel, anyway, you're out there now. You're famous. I said, Daniel, that's perfect. What you're doing is you're adding filters instead of just, finding every single reason to trade and taking loss here, loss there, win here, win there, and kind of being all over the place. You've got a game plan. You've got a, you know exactly what you're looking for. You know exactly how to take it, and you're leaving a lot of those worse trading opportunities. You're leaving them on the table. You're saying, you know what, this could be a profitable trade, but I'd much rather look for the high probability one. And that's the key to trading, is really adding those filters and keeping yourself out of those trading situations that aren't the best. Now, I also got another note from a guy who's interested in signing up that just asking about Akil. Said, I like what you do. I don't particularly trade the Forex market. I'm not against it, but I want to know if these if this technique, if these strategies, really, it's not a strategy, it's just knowing price action, but if this works on other markets as well. And yeah, it does. It works on, any other market out there, any market, any time frame, it'll work. Now, depending on whether you're a trader, investor, you may use it differently, but the skill works. And we actually had a breakdown I did a breakdown of Bitcoin in my Monday live training session with my course members. And well, again, I'll give you guys a brief clip of that, and hopefully you can see it's the same exact thing. It doesn't change. Previous move, we had just broken a previous structure high right here. If we just draw this in, you can see break above, close above at that level. Let's go ahead and make this a solid line, make it a little lighter. Break above, close above at that level. And I was just reading price action because, that's what I like to do, read price action. And I was looking at swing high to swing low. I was looking at an outside return right here. Boom, swing high to swing low. And we kind of shelved off at this level. You can actually make the case for this to be a triangle wedge pattern, something of that sort. But we hold this support level twice, 1, 2. You can even say we come back and test it for the third time right here as we consolidate. And again, you get one of these wedge patterns down here. And then we finally break out to the high side. We get a higher high, higher close above our structure level right here. Now we get a retracement right back into that level. And I'm thinking a long opportunity. I'm thinking higher high, higher close. We've got a short-term bullish rotation. We've got a retracement back into our previous structure level. There's it looks like a 618 fib as well. Let's see how good my eyes are. Yep, right around that 618 Fibonacci as well. Said, is there a buying opportunity down here in anticipation of riding this thing up either to a retest of this level right here or previous structure highs? Well, we go down to the lower time frames, go down to an hourly chart, and here's what caught my attention even more. So price action came down to this level. We kind of shelved off. You can see a little double bottom action down here. Market comes down, boom, retrace, retest, higher high, higher close. So some 2618 action here, right? So you guys see this? We had a similar higher high, higher close retracement on the higher time frame, right? And now we have that same type of higher high, higher close 2618 action here. Give me a yes if you guys see this. Yeah, candlestick formation. I'm looking at the wicks of these candles, and I'm noticing here, I'm looking at even right here, long wick to the downside, 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 all in this same area. Each time the price action comes into this area, essentially, you can take the low of this candle right here, we're holding. We're holding. Yeah, tweezers, I believe the name is. Again, I don't get too much into the candlestick names of these things. I just worry about what it looks like. But yeah, tweezer bottoms. So for me, especially after this first one, the second one at the close of this would be an excellent opportunity to buy. You see how these and this is the point that I guess many people don't come through the training, so they don't get a chance to experience this. This is where I harp on it a lot. This is where that basic analysis, even if you're a pattern trader, this is where that basic analysis of just knowing how to read a price chart comes in handy. Even if you're not going to trade this way, you need to know these skills so you can manage targets, manage stops, do all types of stuff like that. You may say to yourself, man, Akil, I'm looking at this. I've got a potential AB. Oh, let's do one more. Nah, we're not going to get it. Yeah, we are. Are we? Let's do one more. I like feeling fancy. You feel good when you throw a whole bunch of fibs on there. Make you feel like we're doing something right. Another 127. You may say, Akil, I'm looking at this area right here, and I'm seeing ABCD pattern completion, 1-to-1 measure move. I'm seeing structure. I'm seeing 3D2. I've got two 127s up here. I've got massive fib. I've got essentially structure 1, CTS, or ABCD 2, 3, ratio confluence 4. I've got a CTS 4 right here. I'm pretty sure there's a good chance that we're going to see some bearish involvement at that level. What do? Well, if you're able to make it work, you can say, hey, I'm gonna take off partial position at this level. All right, so lastly, I want to give you guys a look at really what an equity curve looks like. I touched on this last week about the ebbs and flows of it during a down week that I had. But I also want to show you what it looks like during the good week. And again, I think the mindset out there is that we should hit the home run every time. We want to take that one trade that, banks us 400 pips, and we're looking for that, once a month or something like that. And really, that's just the wrong mindset to have. We say this all the time. Trading is a grind, guys, and it's not all about the big winners. It's about those normal size winners, those intermediate winners, those 20 pippers. There's those 40 pip trades, and being able to do those consistently. And then every once in a while, when you do get that big winner, that 200 pip winner, that 150 pip winner, that's what puts you over the top. I talk a lot about whenever I get asked by the traders I work with, hey, Akil, what should I look for in trading? And I say, hey, if you can average 3% a month, you're doing fine. consistently. If you're consistently getting 3% a month, you're doing fine. But that 3% doesn't have to be every month. It can be, a break even month in January, 1% February, 2% March, and then in April you get a big 10% month, and then you give some back with a -6%. It goes, it goes up and down. But you do want to get, and typically I'll get about 2 or 3 big months a year, and you really got to take advantage of those if you want to see those big jumps in equity, and especially if you're doing money management, if you want to make those jumps to the next level of your money management system. But what I'm going to do, I'm going to draw out trade by trade the results we had this week between Jason and myself to give you guys just an idea of what an equity curve looks like. And we started off with some pretty big winners. Jason had one for 152. I thought I was doing well for a 132er until I saw his. But you see some pretty big wins to get ourselves off to a nice start. And then we gave some back. We have a -68 and then a +54, then a -49. And what is this? You can see we're just kind of going sideways, right? We're consolidating. We're giving some back. We're not really making any new equity highs. But we're not, we're just, basically in a sideways channel. We're going nowhere. We followed that -49 up with another +51, taking us back up to our previous equity highs. And then we string a couple of small ones together, +35, +25, +52, which is a good size winner, giving us new equity highs. Higher high, higher close for you guys who like to relate your equity curve to a price chart. We give some back again. Retracement -28, and then you see mid-size winners, 55 pips, 48, 56, -20, and +24. So aside from the first 2 winners of the month, nothing real special. It's, we have a big jump, and then it's kind of give some back, make a little bit, give some back, slowly trickle up, give some back, slowly trickle up, like a nice smoothing trend. And again, this is how you want your equity curve to be. You don't want to see violent moves to the upside and violent moves to the downside, especially if you're going on the money management. You want to conserve that capital. You want your retracements to be shallow, and you just want a smooth curve going from the bottom left to the top right of your chart. So again, I always think it's important to show that stuff. I don't know if you guys like it as much as I do. It's, if you're new to trading, you're still trying to figure out how to spot a lower low, lower close on the chart. This probably means nothing to you, but for you guys that have been trading for a while and you're set in your system, you're seeing consistent returns, then you know the importance of this stuff. So with that being said, guys, again, thank you again for joining me for another weekend review video. I mentioned before, you can follow me on TradingView. I'm all over social media. You can like my Facebook page. You can like, I'm obviously I'm on YouTube here. I'm on Twitter. I'm on something else, but follow me on social media if you get a chance. And if you like what you see on TradingView, if you like what I'm bringing over there, and again, I bring about 1 trade a week, it's certainly worth checking out our syndicate. I mention it a lot, but never really explain what it is. You're better off going to the link. We have, it's a whole page and it's a video telling you what to expect and what to not expect. But essentially, Jason's giving you a war room meeting every morning where he's sharing his ideas. I'm giving a few videos during the night, during the evening, sharing my ideas, as well as shooting trade opportunities intraday through our desktop software. And again, it was a massive week. Is every week going to be like this? No. If you join the syndicate today, should you expect that next week you should start trading live, not knowing how to trade and just follow everything that Jason and I say? Heck no. We're probably going to hit a drawdown. A drawdown is going to come. Trust me. I just showed you the equity curve. A retracement is going to come. And if you start trading live, just thinking you can follow us like it's a signal service, you're probably going to start trading live right in that drawdown, and send me an angry email about how I lied to you about making money and whatnot. But I'm warning you, so it's not my fault. But it's definitely worth checking out that program if you want an extra set of eyes on the market. And if you're really on the edge of saying, hey, I'm not quite sure I want to jump in something as deep as a training course. I'm not ready to make that type of investment in myself. But I kind of want to get my feet wet and just see how these guys handle themselves day in and day out in the market, not only on the technical side of things, but on the emotional and psychological side as well. It's, it's $50 a month. You're not going to get anything cheaper than that for the quality that we deliver. And there's some big changes coming too for you Mac users out there. That's going to be pretty good. We're going to get it all on the web. We're contemplating putting a, well, I'm not, no, we'll talk about that when it's ready. But until next time, guys, plan your trade, trade your plan. Do me a favor. If you like the video, hit that like button, subscribe, share it. And just a question I got a few emails about traders saying they would like to see recorded versions of my live room. Many of you like the content I bring, but you can't be on there on a consistent basis. If you're one of those traders that would like to see like an everyday recording, a best of my live room, do me a favor, just leave a comment under this video on the YouTube page, or shoot me an email. It's something I'm thinking about doing. It wouldn't be for free. I would have to charge you, just because it takes a lot of energy, time, and effort to produce these videos. But if it's something that a lot of you guys want, you know, I'll consider possibly maybe thinking about entertaining that idea. So I'll see you guys next time. Have a great weekend, and good luck in the markets next week if I don't see you before then.